Hello, this is Ahura again, and I'm here with you to see what happened yesterday in financial market, what's going on, and what we have to wait for 2 days, for today's events and economic data. First of all, yesterday we had several important events and data that we need to talk about them in the beginning of our conversation before going forward to see what we are waiting for today. First of all, is yesterday's OPEC meeting. OPEC and OPEC Plus, actually, OPEC Plus meeting did nothing. They did nothing. They didn't make any changes in their plan. So the supply, OPEC Plus supply will continue as it was planned before. So it's actually me personally, and many analysts, we were waiting to see a little bit increase in the supply. I mean, to see that supply will be increased a little bit, but it didn't happen, and they kept the current plan on place, and they did nothing. They didn't make any changes in their plan. So the supply will continue still at the same plan as before. It means that 400,000 barrels they will add daily in their daily supply, daily production. They will add it, and it will be. And at the end of the 2022, they will reach the same production level as pre-pandemic. This is what happened yesterday in oil market. It sent the oil price, WTI, not the WTI price, the Brent oil price, to its highest level since 2014 to about $81, above $81. This means that currently the energy price is high, as you can see in a chart in a different group, that the energy market is increasing so crazy. Energy price increase, it brought many concerns about the inflations of producer inflations. When the producer inflation increase, it means that this inflation will move to the consumer inflation, and it will move to the finally they will end with the higher prices that me and you as a consumer, as a user, we have to pay for the products, because the producer, they are not going to pay from their own packet, they're taking from our packet. So it means that inflation, producer inflation, will end to the consumer inflation. It brought too many concerns in the stock market, and Asian stock market, especially in Hong Kong and Japan, they fall sharply earlier today in today's trades, because let me see what was the percentage of their fall. The Chinese market, as you know, is closed still. Yesterday also it was closed. Today also is closed. Chinese market will start from tomorrow. Hang Seng after short fall of in the beginning hours is a little bit increased, but Nikkei fall 2.6%. Nikkei is down 2.6%. This higher inflation, as I told, in producer inflation, it means that consumer inflation also in next month will be high. At the same time, yesterday we saw the American, we saw this. In the US, we saw this factory orders. American factory orders increased 1.2%. A lot more than 0.7% of month earlier in August, month earlier in July, because this factory orders in August, they increased 1.2%, more than 0.7% in July, which was again revised up from 0.5% to 0.7%, and more than 1% of market expectation. So in July, it was in early estimates, it was 0.5% increase. In advanced or in final number, July factory orders increased 0.7%. Market expectation for August was 1%. However, it increased 1.2%. It's much better than a month earlier, almost twice more than a month earlier. So it means that the factory orders, as I told yesterday, factory orders, it means that the economy is doing fine. We have to wait for better retail sales. We have to wait for better job data. So factory orders was good. The producer inflation is increasing, and today is important day because we are waiting for the purchasing manager index numbers for September. If today's, look here, it's very key important things that you have to watch. If today's purchasing managers index increase, most is manufacturing, if I don't mistake, today's manufacturing PMI or other PMI. We have to manufacturing PMI today. service PMI and manufacturing PMI and composite. We have ISM. Yeah, we have ISM composite, ISM service PMI, and ISM manufacturing and non-manufacturing. We have all of them today. If today's non-manufacturing, or today totally the PMI numbers, no matter if it's a manufacturing or the PM or it's a service or composite. If manufacturing numbers increase, purchasing manager index, if today's purchasing manager index PMI increased after increasing the factory orders, and after we can see that higher inflation. If these also happen, it means that we have to go and start tapering as fast as is possible, because we can see that order economy is improving normally, improving on its way, going in normal, reopening is fine, inflation is increasing, so central banks here, they have to do something. So that's why probably if the PMI also become positive today, if it's also better, if it's also printing better number than expectations, better number than months earlier, it means that we have to start to tapering and we have to start to rate raise. Especially, let me tell you something else. If on Friday we have NFP numbers, as you know, if the NFP numbers also on Friday, after these also become better than expectation, we can see increase in all of them, and then NFP on Friday also for September. If it also can print more than the U.S. labor market can create more than 460,000 jobs, then market estimation, the average estimate is 460K, creating jobs for September. If labor market can do better than this, if they increase this number like above 500,000 jobs in September or 600,000 jobs in September, then we can even bet on rate hikes in the second quarter. Like maybe we can start rate hikes even in 2002 and in first half, in the second quarter, not at the end of 2022. So this is the numbers that we have to watch. So for today, manufacturing, purchasing managing index today. I'm sorry, my mind is so busy with something else. Purchasing manager index today is very important. Today is very, very important. We have to watch, and also yesterday in the last trading hours, the Congress, they finally they came together and they approved till by end of the 2020, by end of December. They finally solved this debt ceiling, and right now we don't have the debt ceiling concerns till end of this year. However, in next 2 weeks before October 18, they have to decide for the next year, and probably they will come to some points. As yesterday, as last night, they came to finally at the last hours. They came together and they passed this law. For now, let me see that this is for the end of December, if I don't mistake. Yes, this is in a late. This is the news in a late trading on Wall Street on the U.S. Senate. Prepared to vote a bill passed in the House of Representatives. In a House of Representatives, in a House, it's passed in the House, and Senate they have to confirm it today. If the Senate also confirm the House decision, so by end of December 2022. So till December 2022, they will solve this problem. This debt U.S. debt limits will be solved till December 2022, till next year, not just till this December. So this House last night confirmed it, and today, if the Congress also can confirm it, it means that till end of December 2022, we will not have the concerns about the debt limit of U.S. debt limit. So the Treasury will not have a problem to issue the new. For now, they will not have a problem to issue the new bills. This is also something good, and it will it will help stock markets to increase. So this was positive, and let me see that let me see in a chart. Sorry, there is in a chart. This is a VIX. As you know, after this news, when we had an increasing in market risk after what happened for the Facebook and Instagram and stuff like that, this news that the passing this bill in this house, it's helped the market risk to decrease down to 20, almost 22. After that, it decreased to almost to 23. Now the market risk is up. Still, we need to see that it will be passing the Congress as well, because the House, you know, the Democrats, they have the majority and they can pass it. In a Congress, we have to see what happened in a Congress. If they pass in a Congress also, then we can see this market risk to decrease a little bit. If it decreases, the US dollar right now, after these things, after what happened to higher risk in the market, again US dollar index, especially after what happened for the Facebook and interest for the bond yields, US dollar is increasing above 94. Totally, what we are waiting for the second half of 2021, in this even the last quarter of 2021, sorry, is to see more higher prices for US dollar index. So totally, generally, US dollar index is in a clear uptrend and still is continuing, as you can see in the 4 hours chart. Also, is uptrend. It will continue this uptrend, and we can see the US dollar index in higher levels by end of this year. Still, however, it can be a little bit limited. Not too much, but like 90, more than 94, 95, 96, probably something like this. We cannot see, we are not waiting for something more than 95 or 96. This increasing the US dollar index and decreasing in the market risk after what happened last night, it will push the gold to fall down. So the market risk is decreasing after what happened, after this bill passed. So it will help the gold to lose the ground. You know, the last night, what happened for the gold market, this is this higher risk suddenly increasing in a market risk, especially after what happened in the Facebook. The gold price increased. Same thing happened for the Bitcoin, if you can see the Bitcoin chart. But both of them, they cannot, it was not good enough reason to keep the prices high. So both of them, the gold and Bitcoin, probably they will lose the ground, they will lose their gains, yesterday's gains today. About the oil price, oil is in its highest level since 2014, and we cannot see currently, especially if today's this is the depend. If today's PMI Purchasing Manager Index also, if the PMI numbers also become better than expectations, and the overall economic situation seems like fine, then we can see still the oil price in higher levels. It's depend on that. I mean, just because you know what, the supply is limited. If the demand is increasing, the signs of the increasing demand is the better stock market, is a better PMI and totally economic data. If today's other economic data also become positive, better than expectations, then we can see more increase in the oil price, and still, as the Goldman Sachs expecting to go, oil price can increase up to $90 end of this year. But in the stock market, this is the futures market. As you can see, the futures market, this is the last night with the Facebook. What happened? Totally, the Facebook solved this problem, and it was, as we know, as the news says, it was an inside problem between the employees that they changed the DNS and stuff like that. So let's see what happened. Whatever it was, they solved it. And by the bills that last night the House of Representatives, the House, they passed it. So probably stock markets will be increasing today, and it will be the positive for today. However, it shouldn't be that much, because at the same time, market inflation, the inflation is increasing, and the higher inflation, it means that starting of tapering and rate hikes, so which is not fine for the stock market in the short term, not in the long term, in the short term. So in the short term, for this, for today and next days, we can see a little bit some kind of side movement, a little bit up or a little bit down, but not that much moves to downside, or not that much moves to the upside. But overall trend is still down. Overall, still we have slowly downtrend. But this downtrend will be limited. Will be so soft. This is the generally what's happening in the stock market. Let me, as I told you, the Bitcoin also, I told you the reason of the increasing, and I told you that this is that Ripple didn't increase that much yesterday, or Ethereum. It was what happened is in a Bitcoin, happened in a Facebook. About the currencies, US dollar, as US dollar index, US dollar increasing, so it means that the currencies against US dollar, they are in a weaker position. So Euro USD still, it's in overall downtrend. Back is in downtrend, still even didn't touch the in a midterm. If you go, didn't touch the 50 moving average, 50 period moving average in the H4 chart. In the daily chart, so far than this, so under that. So it means that still we are in the overall downtrend, and this overall downtrend can continue as long as, especially it's under 1.17, especially we are under 1.16 right now. Same as pound. We can see the pound also falling against US dollar today, because this increase yesterday was after that US dollar fall. Today, with the increasing US dollar, we can see the weakness in cable. However, the thing is that since the pound also by itself is a little bit positive, it's a little bit strong, we cannot see that much downtrend here. Overall market, however, is for now is kind of side movement will be, but with limited downtrend for GBP USD. This is what happened yesterday. Today, and what we have to what happened yesterday, and what we have to wait for today's stock market. Hope it's useful for you. If you had any idea, if you have any comments, please let me know. Write in the comments what you want to hear more, what like more fundamental, more technical, or what else. Let me know what is your expectations, and we will keep the videos on based on your requests. Thank you so much, and have a good day. Bye bye.